All right, everybody. Thanks for joining in. First of all, appreciate Pilot for hosting this and for everybody else well for joining in. A little bit about myself. I've been trading full time since dabbling since 2015, um, on and off throughout the year, and then I went full time 2021 because 2020 COVID happened, and I figured real estate background, real estate was kind of hit by the COVID. Nobody was working really. I ran my own team in a real estate investment side, but I've always wanted to trade, so I dove into it when COVID happened. First stock I traded when COVID shutdown happened was Zoom. So hopefully you guys caught that Zoom dip. So I rode that up from like 45 to like 120, and then I sold, and I thought I was like, oh man, I'm gonna get rich doing this. And then of course, as you know, Zoom went to like 500 or something like that. But I was like, all right, so I gotta start learning about stock a little bit more and put real estate aside. And so that's when I started just buying courses. And I love buying courses, for those of you that, like think they're not worth it or some of them are scam, and some of them are. But at the end of the day, education is everything. And so I started buying courses, anywhere from, all the big names that you find on Twitter to, anybody that you can find on YouTube. So I bought all the courses, subscribed to their channels and learn, kind of get an insight on what they do and, all that good stuff until I started finding um, my own style. And so scalping was really more of my pace. And so you know, I like fast pace. Like in real estate, I was flipping a lot of houses, so transitioning into to stocks, scalping was really appealing to me. And I don't like to wait. I don't know about you guys, but I've tried swing trading and I've tried option and all that stuff, and it's just the waiting is not for me. I like fast pace, high adrenaline. It's high risk, high reward, but if you master it, then you can make fast money. Um, so that's kind of what I did 2021 full time, and then I'm still full time right now, and then joining in with you guys. Very fortunate to. I've always wanted to join a prop firm. I've been consistently profitable. Of course, there's always been fine tuning and whatnot. So what I'm going to do today is I want to share with you guys what my simple process that has worked for me, and then what you can do is just kind of take in what I'm sharing and modify it however way you want, whatever works for you. But I have a few rules that I follow to keep me in line or protect my account. So let me know if you can see my account or my screens.
Yeah, we're good.
Okay, awesome. So as you can see right here on my screen, I got my watch list right here. The main thing I really watch is the percent gainers. Since I'm a scalper, I like things that moves fast. So the first thing that tells me is, the top percent gainers are where everybody's attention is, right? Everybody's looking at those stocks. And then I kind of just go down the list, and I prefer pre-market volume at least a minimum 500,000. Okay. And the stock needs to be at least a minimum. I prefer $2 and above. Okay. These are penny stocks, but my range of price that I like to really trade is between 50 and $20 in between those range. Anything cheaper than that, I tend to, not as, excited about it. So I have the percent gainers right here. Any of you that have platform, you can pull those up for free. Um, that's about it. I don't do anything special. Sometimes I'll look at the like the losers or anything like that. Um, this is also the Thinkorswim platform. I've been using the Thinkorswim charts since day one, and so I'm very familiar with navigations and all the tools and features, and so I use that as hybrid with the Sterling Pro. Okay. On the left bottom corner right here, this is my rules. This is what I follow. Okay, this is my morning ritual, I would say, before I start trading. Okay, this is trading rules. So number one, or the first thing is do not anticipate. Wait for signal. And I'll go over this and what all that means. And then number one, draw the current time frame trend up or down. Number two, remember the 50% rule pullback. And then number three, do not trade against the 10 and 20 SMA. I use the 10 and 20 SMAs a lot for scalping, and I'll go over that, what you see here in the chart. Number four, cutting losses quickly to protect profits and your account. And then number five, draw the key levels of support and resistance as reference only. Okay? Because number five ties back to do not anticipate. All right. So number one, um, draw the current trend lines. Okay, so I like to look at many different time frames at once. As you can see here, I have four, right? Typically, I'll have the right hand side is the 1 minute. Okay, so the 1 minute, and then the second to the left is 5, upper right is 15, and then upper left is 1 hour. Let me clean up my chart too. So okay. So first thing, my process is I look at the 5 minute since I like to scalp, so I'll zoom out like this. Okay, and I look at the trend. So far it tries to trend up, and then I can see here that it kind of consolidated. So now I can identify that. Okay, so it struggled at this level right here. Okay, so it struggled there. I'm going to use that as a top. If it breaks above that, I'm going to use that level as a potential support when it comes back down. But overall, if it stays below that, I'm going to be short bias. Okay. And then the next level that I like to see is low of yesterday, right? So this is where it really transitioned. And so I would respect this level as a key levels where people really start buying that level and drop it back up. So in between here, I like to call this is like the key inflection level, another key level if you're trading within the range, right, between these two red lines. So then I would respect this area right here. If it stays above here, then I can scalp this area. If it goes below here, I can be more short bias on the pops. And so that's kind of my process. Okay, so as far as the trend, obviously it popped up here pre-market, right? Popped up pre-market. I know this is a resistance level, right? So the trend right now in this quick little pre-market to me is is a little bit of bullish. So I'm gonna be bullish if it goes above here and then buying any of the dips, right? Of course, what I've learned is all of my long trades are pretty weak when it comes to profits, and I'm more profitable on the short side. So I've learned that I need to size down on my longs. But that's kind of how I read it. So, but as you can see right here, already rejected, it transitioned right on the downside, oh, on the downside there. And so what I'm looking for really is let's see here, number three on the rules here. It says do not trade against the 10 and 20 SMA. So right here, I know this is a rejection on this level. So now I'm looking for a confirmation on the 1 minute to see the once it falls below the 10 and 20 SMA on the 1 minute. So we're gonna switch over to 1 minute. Okay. So right here where it fell below the 10 and 20. So what I like to what I like to do is I like to short below the 10 and 20 moving average, and then I like to go long above the 10 and 20 moving average. If I can get both the 1 minute and the 5 minute to line up on the directions I'm going, like for example, like I know I want to go short here on the 1 minute, and the 5 minute confirms right here, and that's when I really size up. Like I'll size up here, okay? Because that's a confirmation weakness, and especially when it crosses over key levels like the 200 moving average as well. Okay, so that's kind of my short setup, right? And of course, if it flips, you can see I call the 1 minute as my trend starter. So as you can see right here on the 1 minute, it crossed over above the 10 and 20, and it's not really quite bullish yet until the 10 crosses above the 20, right? And then you can scalp this, right? You can scalp this upside. And then what you want to do is you want to look ahead up above where is your next resistance level, which if you look at in the 5 minute, you can see it right here. This is the 10 SMA and then also the 200 SMA, 200-day moving average or simple moving average. So that's basically my process on scalping these trades. And like what pilots mentioned, like I do a lot of volume. My starter is like 500 shares, and I'll get up all the way to like 5,000 shares. Before I got in with you guys with full scale, I would I would be like 5,000 share starter. Okay, starter and all the way up to like 50,000 shares in some of these trades. And so I'm just getting the hang of the new platform of the Sterling. And once I get more comfortable with it, I'll size up to like the 10,000 to 20,000 positions. Um, and feel free to ask questions as I'm going along this. I like to go over these process with interaction better instead of me just rambling along. So does that make sense so far to you guys?
Yes. But
Go ahead.
I'm not sure if there's questions, but I will just chime in here. If I know you've mentioned some trend lines and stuff like that. The Sterling platform does have that stuff, guys. If you need help getting those populated and saving them onto your charts, Narf or I can definitely help you with that this week. So don't worry if you guys don't have the same lines on your charts. We can definitely get those up for you if you're going to attempt to try using some of this knowledge today.
Okay. Awesome. So okay. Um, so that's the trend, right? So number four, cutting losses quickly to protect my profits. So here's kind of what I follow on cutting my losses. So let's say I go long right here, right? I'll go long right in this level in a 1 minute. It's above the 10 and 20, and now it's kind of consolidation. Another signal that I can rely on, right, that kind of increases my conviction is when I start seeing wicks at the bottom of these candles. That tells me there's buyers are coming in. And then of course I want to see volume increase as well. As you can see, volume increase in this candle. So we know there was buyers waiting right here. So for me to stop out is I would call these level right here, which is the previous last green candle. If it breaks below that, then I'll cut my losses and then just wait for another setup or actually switch to short. Okay. Uh, Most traders that I've known and some of these traders in my coaching and my Discord, um, they have a hard time cutting their losses, which we all fall victim to that because of our emotion, right? But I always tell everybody is like if you determine a solid line that's kind of like a line on the sand that says, okay, if it stays above here, I'm gonna stay long. If it goes below here, I'm gonna get out of my position. Or I'm gonna switch short, right? um, that makes it easier to manage your emotion because you have a predetermined line to where you're in or you're out versus if you don't have a predetermined line, you don't know when you're going to get out and your emotion is going to get clouded around here if it keeps falling, right? If the stock keeps falling, okay, it keeps falling here, you don't know when you're going to get out unless you have a predetermined line. So that's always good to have a predetermined line where you're going to stay in or out. Okay, so that's how I cut my losses quickly, right? And of course, some of you may have experience like averaging down or averaging up, right? If you're going to average down into a level, like you better make sure you have something else to correlate that with. So, for example, if if this stock right here falls in this level, like the $46 area, and I double down on my position. Let's say I have like 500 shares here. I want to go 1,000 shares here. I want to know that this level has some sort of support on a bigger time frame. So let me draw this out and I would do this, change the color, change that to solid, and then I'm going to go green. And this is already predetermined that say, okay, if this price falls to like this line, I'm going to add, 500 shares. And what is my big reason why? So what I'm going to do is I'm going to go look left on my different time frame. So as you can see, they're all linked together. So I like to go in like the hourly, I like to go in hourly and look at it. What I want to see is I want to see a level like you see this area right here, right? So that area held, right? So I could use that as a level to go, okay, this was a support level. Buyers came in, there's wicks at the bottom of these 1 hour time frame. I can use that, right? And remember, there's no guarantee on these positions, so you just have to know and accept the risk that you're putting on. And so I'll look left on a bigger time frame right here. So as you can see right here, right, on the daily, that's the support. So I know $46 area is a good support if I'm willing to double down on my position. And that's the only time I'm going to double down my position. But let's say, for example, that top right there wasn't there, and I'm going to move this green line down here, right? The next key support is like right here. I won't double down on that position. I'll just cut it. Okay. So that's how I kind of determine, cutting losses quickly. And it's always an emotional battle as these stocks are moving, especially in the morning. It moves so fast that you have to train yourself to respond fast as well instead of freezing. And like again, um, I'm not 100% there based on my rules that I have written, but that is what I practice to myself every single day. Like I try to stick to it as close as I can. And so because I know when I follow these rules that I've written, I'm green for the day. Like 80, 90% of the time I'll be profitable if I follow these. When I do take a red day and I review my trades, which I highly recommend every single one of you guys review your trades, um, I know that I broke multiple of these rules, multiple of them. One, I would be like, okay, the trend was down and I was trying to go long, or the price of the stock was below the 10 and 20 SMA and I was still trying to go long. Like that's how I determine and use these rules because I've reviewed them many, many times. Okay.
Good day. By the dips?
Yeah.
Yes. First of all, thank you for putting on this training, this presentation. Really appreciate it. I wanted to ask you, are you paying attention to the spread when you're entering in on a stock? Like, do you have, yeah, so
Yes.
that's the question so far.
Yeah, so I actually do. I look at how much the spread is, and a lot of these low float stocks are
Hmm.
pretty tight on the spread, to be honest. It was within a penny or a couple penny, right? And when I get in, since I'm already stocking my entry, I don't try to I don't try to, you know, worry about saving a penny on a bid or something. Like I was just talking to Narf today, and I was saying like, I'm having a hard time getting in and out of my trade because I was having limit orders, right? And
Yes.
and
Yes.
so if I'm getting in on a trade, I don't care if I'm gonna buy at the ask or market, as long as the spread of the stock is like a penny or like less than 5 cents, right? But depending on the price, obviously. Some of the higher price stocks like, Twitter or anything that's $50 and above, they have anywhere from like 3 to 5 cent spread. And depending on your position size, that can significantly affect your P&L. But a penny, like I will get in right on the spot if my entry signals is saying, okay, it's above the 10 and 20 on the 1 minute and it's confirming on the 5 minute as far as the trend, then I'll just get in on the market, right? Um,
Perfect.
so yeah.
Perfect. Thank you. I appreciate it.
hmm Any other question? Okay, so going over to, let's see, I went over. Uh, Let me go over the number two, which is the 50% pullback. How many of you are familiar with the 50% pullback? Not too many. Okay, so we're gonna use the 5 minute time frame. Let's clean this up. All right, so the 50% pullback rule it's crazy accurate. So most of the times, when these stocks starts running up like this, I like to pay attention where the 50% area is, right? And the tool that I use on Thinkorswim is this quadrant line. Okay, so what I would do is I would draw the high point of that move, and I only draw it once I see a transition, right? I don't draw it until there's that a potential reversal transition already in place. And then I draw it from the low. And the 50% pullback, as you can see right here, 50% is around 45.25. Now, if I was to draw a line there, since you can't see to the right, we're gonna see if there's a correlation in that area since Twitter has already dropped. Okay, change that. All right, so now we're gonna look to the right and see how that level kind of let me just do this, how that level responds there. So as you can see, so that 50% area, there was a gap down. I think this was Friday. There was a gap down, got pushed up, but you can see there's a lot of it dropped down to that 50% area and then it ran up and it fell back down again. As long as it stays above here, this becomes bullish again. As you can see right here, you can see the behavior of Twitter. There's buyers coming in this 50% area. So what that means to me is if this thing starts to transition, as in like the pattern starts uptrending, then likely I can take a long trade on Twitter, maybe possibly tomorrow, as long as it goes above the 10 and 20 SMA. And what I like to see the pattern on on uh, on my entries is this pattern right here. So you can call them the cup or the basket. I call them the basket, but this is what I like to see on the 10 and 20. And what I want to see is the candle starts to form like this, right? And then once it starts doing that consolidating right around here and maybe a couple wicks up, and then it starts to trend up. You start forming higher lows, right? Start going higher lows. And this basket right here is my 10 and 20 SMA. I prefer my 10 SMA to be above the 20 because it's a shorter um, calculation. So it's moving faster along. And what that does is, to me, what that means is that's a momentum coming in, and now you have momentum support below the price action. So as the more aggressive the 10 and 20 points up, the more aggressive I will be, or how my confidence on that trade is going to be greater as well. Because the probability, if you look at it here, if the stock was moving up, right, like this, and it moves up more aggressively like this, and this is where it starts moving with high volume, and then it suddenly drops like this, right, which we call those a rug pull. Since I have my 10 and 20 right here, the probability of it bouncing back up to the 50% area, right, is pretty high until the 10 and 20 it starts to curl down. So once the 10 and 20 starts to weaken, then that's when I know the momentum is shifting, right? So if this 10 and 20 starts to do this, right, like that, then I know the momentum is shifting and the candle is going to start looking like this. It's going to start looking like this. Okay, now as you can see, it's starting to form below the 10 and 20, and it's the same pattern that you do in here. Okay, and I like to see that on a 5-minute time frame, and it's very, very reliable. And I always suggest that you guys review your charts and start looking at the 10 and 20 simple moving average, because it literally presents itself as you can see right here. Everything is below the 10 and 20, right? You can see it right here, and then it just continues on. And as you can see, right, the price candle tries to pop up, but since the 10 and 20 SMA has a downside momentum, it's likely to shove it back down. The probability of it, let's say you have some random candle spike, right, like this. The probability of it coming back down to at least 50% is pretty high. And that's why I have that number 2, remember the 50% pullback. And that 50% pullback applies to the whole entire trend, like this, right? This is the trend right here. And it also applies per candle, like the ratio of it, coming back up 50% of that candle is pretty high. So let me show you a good example here again too. Let me delete this. So you can see right here from this high, okay, to this low right here. So we're gonna pretend that this area right here doesn't exist yet, right? So let's say you saw this drop and then this red green candle right here with long wicks at the bottom, which is again long wicks at the bottom means buyers are coming in, long wicks at the top, sellers are coming in. Okay, so as you can see, it dropped down from this high, came down, and then buyers started coming in. And if you're wondering, it's like, okay, why are buyers coming in right here? What I like to do is I like to draw this line, okay, and then I like to look left, right, and then you can look left on a bigger time frame. Like why is buyers coming in right there? This is the red line, right? So as you can see, next level of support is right here. So now you can determine, okay, if this is where buyers are coming in, 45.60, the next support is 45.05. So about 60 cent range still. If you're gonna get in here, just be cautious that you still have a 60 cent downside before the next wave of buyers comes in. Okay, and then you can look at it at the bigger time frame too on the daily, and you look left. Okay, you look left, and boom, it lines up with this guy. So now if I see that on a daily, right, the bigger time frame, then I saw it on a 1 minute. Buyers are coming in. I look at it on the daily. There's actual support here. So now I can scalp that on the upside. So now I can go, okay, um, a few pennies here to scalp. So then I draw that 50%, and my probability of target is the 50% ratio right here, which is exactly where it went. Okay. And another thing too is the faster they fall, the faster the price action falls, the better it is and higher probability of it bouncing on that 50%. If it grinds down, it's going to be a lower ratio for it to bounce to the 50% area. Okay. So same example here. So let me show you another 50% ratio right here. Okay. So this bounced to the 50%, right? You see that 50% from this point and this point. Okay. So now you have this point right here and this point building, and it bounced right back up to the 50% area. Okay, so it fell, it bounced, held, went up 50%. Now it bounced through. Now this is being tested 1, 2, 3 times. Remember, this is a support level. The more time the support level gets tested, the weaker it gets. Okay, so therefore I know I can't rely on this bounce to potentially go to here or here unless the 10 and 20 starts to curl, right? It needs to present itself. So now that it breached that level of support, my next target is this guy right here, this line, okay? And then if it breaches that, my next target is here. So then I can scalp this range right here with appropriate sizing, okay? Depending on the time of the day as well. Right now it's later, lower volume, a lot of algo manipulation and whatnot. Um, you should be sized down. You should be sized down on these kind of trades if you still want to trade, or you can just sit there and just watch the price action to learn more about like its behavior. Okay.
Yeah, so I just want to chime in here. Two things. One, maybe show the group how you draw those percentages again, where you take both points from. And guys, I just want to highlight, he said something very important with when he drew a line and he noticed he had 60 cents until the next support. For a lot of guys with tighter DMLAs or max losses, he mentioned, you still have 60 cents potentially of room
Yep. For the
that will
downside.
not be in your right before it bounces again. So just be wary of that stuff. It's really important, and I really like that he highlighted it because you might get wicked out or shaken out, uh, and it just might be because you sized too heavy and you didn't realize there's another support there, and you may have preempted your sizing before the actual takeoff from the next bounce.
Hmm. Yeah, exactly. So you just the main thing is if you're gonna get in a trade, the for me it if I'm getting in a trade, for me is it needs to be above the 10 and 20 SMA, and it needs to have some sort of a basketing or an uptrend already formed, right? If I already missed like the nice basket pattern already, right? And I'm like, okay, this is still bullish. And going back through what we're covering is where is your next level of resistance? Like you need to identify that so that way you know where your range are, right? So if I know this is resistance and let's say I'm getting in a trade right here or right here, right? um, I need to know that okay, this still has room to this area to the 45.92, but then I have to remember, okay, how much has it bounced? Did a 50% bounce already apply? As you can see here, right? It already applied the 50%. So therefore, the probability of it continuing is lower unless volume really picks up. Volume has to come in for it to go to the next level. If the volume starts to fade, just know that 50% of its bounce has already been used and it's weaker. It's like the your volume is like your fuel, right? It's your rocket ship fuel. In order for it to keep going and bust through these levels of resistance, volume has to be in with you. Okay. Um, I think you mentioned about how to draw these lines. So these lines is or the tools I use is it's called the quadrant line with Thinkorswim. I don't know the Sterling platform that well, so I don't know which one that is. But if you can see, this is my calculation of that. I modified it because it used to be actually let me bring you guys back to history of why I use that quite a bit. So when I was first learning how to trade, or just discovering the patterns, I'm like, okay, what is the behavior and what does it do? And I started drawing these levels, right? We all get taught about like draw your resistance and then draw your support, right? Actually, let me move this one. Let's move this one up here. Okay, so we're gonna pretend this right side again doesn't exist, right? This right side right here doesn't exist. So we only see this area right here, and we're like, okay, what is it gonna do next, in the next whatever hour? So what I used to do is I would literally just eyeball these highs and lows and go, all right, 50%, based on what I've seen on the chart. I'll just draw one line right here, and I'm not looking at the chart, right? I'm just looking at my lines here, and I'm just gonna eyeball it, 50% of each one of those, and I just start doing this, okay? And I would have these, I call it the five lines to my students. And so I was like, okay, there's five lines right here, and now let's look to the right and see how that is respected based on the price action. And what I saw was so accurately, look at this, okay? Look at these levels, okay? It got up here, it started rejecting, got down here, it started rejecting, got here, and then this broke through, it bounced here at some point for whatever reason, you always have to look left, and now this area is confirmed as resistance. And now let's look at the downside, let's see how it's respected there. You see right here, now it's starting to bounce at this area, right? We didn't know this was gonna happen. I just started drawing that. But I learned that there was actual tools, which is the quadrant line on Thinkorswim, and I started using that. And again, the tools that Thinkorswim had was only a five line, which was like great. And so what I did is I modified it to add 100% to the upside and 100% to the downside. So now I have full extension, as you can see, the 100% here and then to zeros, 25, 50, 75, 100. And then I added 125, 150, 175, 200, and then negatives on the downside. And I can just draw this and leave that. And for the rest of the day, I have levels to reference to, right? So I use that as a reference point. So now I know that these are my solid line in the sand. If I'm above it, I'm gonna be, long bias. If I'm below it, I'm gonna short bias, right? And then I want my indicators, my 10 and 20 simple moving average in my favor. If I'm going short, I want the 10 and 20 SMAs to be pointing down, If I'm going long, I want them to be pointing up. Okay. And it's really as easy as it gets right there to me, to try to keep it simple instead of using. I've used many different indicators, guys, like the Fibonacci, the cloud, um, the RSI, the MACD. Like I've tried all that, and they all work in some level. But at the end of the day, you have to feel and trust your indicators. That once the signal presents itself, you trust it and you believe it, and you can take that trade. So therefore, there's no conflicting or doubtful. Hey, is this gonna hold? Is it not? Because I know that if my signal presents itself like this level right here, like I would take this trade all day long. Okay, because now I have layers. I have the 200 simple moving average on my favor as a support, and I'm above the 10 and 20 SMA, and then I can do a starter there, right? And if that confirms on, let me see the second day, confirms on the 5 minute, what is that right here? Okay, confirms on the 5 minute right here, right? It got above, or even right here on the dip back down, I would take that long trade. And
Yeah, I
then
believe you even took that today, to be honest, in that area.
I did,
So
yeah.
awesome. Yeah, so guys, I think what's important here too is he's highlighting that he's not convoluting his chart with 8 million different indicators. He's finding not one but two that are really working for his strategy, coupling them for confirmation, and then believing in the data. And he's
Mhm.
taking the trades.
Yep, just execute your trades. Don't like when you first start using these indicators or any indicators that you feel comfortable with, just do like, 5 shares, 10 shares, right? Because you're just trying to practice that trust into the indicators. And you don't have to wait, to be honest. You don't have to wait till like trading days to come for you to start trusting these indicators. All you have to do is plot them out, right? Have them plotted out, and then all you have to do is look left. Like these indicators will present itself, right? Let's just say right here, okay? Like I always say, and I'm gonna go over on the next section here on uh, winning ratio versus losing ratio based on these indicators, right? You get that. If it's above, you go long, right? If it's below, you go short, and it crosses over here, you stop out, okay? And all you have to do is look left. Look at this, okay? Like it's clear indication that where you should be getting in and where you should be getting out. All right. And then another thing to clarify is why do I have different time frames on my charts? Like I have 1 minute, 5 minute, 15, and 1 hour, because now I can use those same 10 and 20 simple moving average as my support or resistance based on the different time frame they are in. So for example, let's say right here. So Twitter popped up, right? I took this trade and it popped up, right? And now you can't see nothing here yet, right? And you're like, what's up here? Why should I, think there's resistance up ahead? Well, if you look at the 15 minute right here, the 15 minute, you're approaching a resistance level, okay? It would have been much better if it came up like higher, right? Because you have three layers. You have three layers of resistance. You have actually four layers of resistance. You have the opening price, right? It went from red to trying to go green, which is a high, a hard reversal. And then you have the 200 moving average. You have the 10 and 20 all right there. So you have four. You have the 10, the 20, the 200, and the opening price to break through. That right there, I would call that as an A plus setup to the short side. Like I would have preferred this thing to pop up a little bit higher, like really get close right here. So that way my risk reward is it's very good, because Now, remember, you want a solid line on the sand to go, which side are you in? Are you long or you're short? So meaning if this did continue to go up, right? Let's say the candle closed up here and then I got in short right here. You see the gap in between those two is smaller. So therefore, I know my line in the sand that, hey, I'm short below this line and I shouldn't be short anymore up here because now the momentum will shift because now remember resistance becomes support. So if a candle closes up here, now those four lines becomes a solid support. So now my ratio, risk reward ratio is greater because I know I have a lot of room to the downside and my stop loss is like up here. Okay. So hopefully that makes sense. So this is why I have multiple time frames because if I'm just staring at the 1 minute like this, I'm going to be blanked out on what's ahead of me, what's up here, right? As you can see, the 10 and 20 is not there. You only have the opening price and the 200 moving average is up there. But when you go in a 15-minute, you have the 10 and 20 right there as well, and it's downside, right? So that's a high conviction A plus setup for short. This is the time. This is the time where I would load up a little bit more on positions because that's a bigger time frame resistance. Okay. All right. Questions?
Feel free, guys. There's no stupid questions, so don't feel anxiety for asking anything.
The more questions you ask, though, I know the more your brain is working.
Exactly.
So, let's see what else. Anticipate. Okay. Let's go over the do not anticipate. Why did I make that rule? Okay, so same example. So let's say um, same example, right? We're using the same example here. So Twitter starts to pop up, and I load up right here, right? When it pops up there, and if the stock continues to go up, okay, stocks continue to go up, and volume start to increase. I don't try to anticipate that it's gonna come back down. I don't want to anticipate that, oh, this is, this is four layers of resistance. It shouldn't break it. It's downside. All the indicators is telling me it's short. Um, don't get stubborn here. So what's happening is if the stock goes up, the price candle goes up and closes, and then especially if another candle starts and starts to go green like this, you start flickering, especially in a 1 minute, you'll see this. Like that's when your heart starts moving. But don't anticipate this thing to slam back down. You rather just cut your losses right here and then re-enter down here. Okay? Like don't anticipate that it's gonna rug pull and slam, right? Because we don't know that. We don't know it's gonna do it or not. But if the probability is highest on the downside, you can either size down, right? Because you don't want to get ripped to the upside. So size down, like typically what I do if it does close up here, I will cut half of my position, and if it continues to go up, I'll cut another half, and I'll slowly scale out. I'll slowly scale out my position, and then from there, I can kind of just lick my wounds and just go, all right, that didn't work. So don't anticipate the levels to go in your favor just because I'm telling you this is a hard resistance. It should come back down. Don't anticipate that it will go in your favor. Just let it present itself. Okay, that's why it says wait for signal. If the signal says it's above the 10 and 20, that's a signal for me to get out. Okay. Let's see what else. Current time frame. Is this making sense to everybody?
Yeah, I think you're being very thorough, so it's awesome.
Yes,
Uh,
yes, it is.
Okay.
awesome.
So I guess
I
we
think
could.
what's important about what you just covered there is when a lot of traders, when they do homework, even on their own trades, they're saying, "Oh, if I would have just held that, I was overall right." Uh, And I think that convolutes, the go forward positions when they're trading because, if there's always an indication that, I'm overall right all the time, that's not always going to be the case. It ends up burning you out. So I think what's important here is he's okay taking losses. And what I try and tell people when they're trading, they're going through this is whether you hold on to a position or not. I mean, the money you have to make up, whether you realize that loss or not, and it turns right at that time, you have to make up that loss anyways. So it's okay to realize loss for a better entry and more confirmation. So that's some really good tips there.
Yep, totally agree. Yeah, so accepting your losses is gonna be another emotional challenge that you need to overcome. Is be okay with the losses that you're gonna take. It's just part of the game. Um, it's kind of crazy because like I'd be some like some of my trades in the past, like I've taken big losses, and in the beginning it's like it mentally just wrecks you, and then once you get used to it, you just like, oh, well, as you have to ask yourself, like, did you take a trade based on your setup and your indicators? If the answer is yes, you should be okay with it. If the answer is no, then that's when you can find your problem and how to fix it. You go, okay, I took that trade, but what was it triggered by? Was it triggered by emotion? Was it triggered by actual indicators that I respect and follow? Okay. So review that throughout your trading weeks, and just mix and match your, what did you do right, what did you do wrong, and then match it up with your indicators, and then that'll give you this trusting process to go, okay, I'm gonna get in or I'm gonna get out, right? Then it becomes less and less doubtful based on your executions. Okay. Execution is everything in trading. Like if you hesitate and then you miss the move because your setup was there, all the patterns was there, and you're like doubtful, and then it rips in your direction and you're without you. And that's when your brain starts messing up. That's when you start like doubting even more because you didn't take the trade. You'll build your trust on your setups just taking your trades, whether it be right or wrong. Just to execute it is going to increase your trust. Okay, even on a losing trade, it will build your strength of trust on cutting your losses quick. Because if you cut your losses quick and it keeps going against you, now that's an increase of level of like, thank God I cut my losses, or thank God I executed on my trade and I won, right? So yeah, that's about it. So ask your
Awesome.
questions, guys.
Yeah. Does anyone have questions?
I wasn't
Okay.
here for the whole thing. I was wondering where are your price targets? Like, where do you exit in profit? Because that's where I'm having the most problems.
Okay, that's
Good,
that's a
good
great
question.
that's a great question. So let me go over that. So on the 1 minute, right? So on the 1 minute right here, let's just say I got in I got in right in here, right in this can on this little, what is it called, doji candles, and it pops up, and you're wondering, okay, when do I take profits? Um, the answer would be, okay, looking to your left, right? So if I draw a line here, so we know the bottom of these candles right here on the 5 minute is resistance, right? So if, as you can see, I drew it on my 5 minute time frame, right? Because I can see it here, that's resistance. And now on a 1 minute, now it just drew me a line there. So I would respect that as a resistance level. So this candle right here, this first initial 1 minute candle, this pop right here, I probably would have taken, because again, this we're scalpers, right? So I'd probably take half a position right here, and then on the next green candle, I'll take out another half, and then let the remaining run. And then if it once I start seeing wicks at the top, that's when I'll just close my position because I don't know when the next rug pull is gonna happen, or like this big red candle right here, right? I still know that the 10 and 20 is in my favor. I'm still bullish on this trade, but since I'm scalping and I want to lock in those gains, um, I'll sell into these pops. Okay, so to answer your question, how do you take profits? You gotta identify your next level, right? You gotta identify your next level. So why are you taking this trade here, right? And what is your, I guess, the risk reward ratio, right? So the reward or the setup is really in my favor. I'm above the 10 and 20 SMA. I got, momentum on my side. And my next target, I have room from, let's see, what is this room? So what is that? 27 cent room. And then my downside is below these candles right here, right? Below these candles. So I have a downside of 14 cents and I have a upside of 27 cents, 28 cents. So I know that might be a little too fast in calculation when it comes to like when you're live trading. Oh man, LIXT just freaking tanked. Anyway, so okay, so let's use this guy as an example since he just freaking halted. I think it's halted. Okay, so it's halted. So in this case, okay, so let's pretend I'm taking this trade. I know that it's right at the open price. So what I'm gonna do is I'm gonna draw a line there. Okay, I'm gonna build a case. Do I want to take this trade on the long side for potential scalp on the bounce? Okay. So then I'm going to draw that line. It's a solid green line. And the first thing I see on a different time frame, so one case is this is an opening price. So like, okay, that's one layer. Two layer is I have my 10 and 20 my 10 SMA as a support as well. So that's two. Okay. So now I'm going to go in a bigger time frame. So go here, go in the daily, and then zoom out. So now I'm going to go, okay, what else can I add into this supporting evidence that this could bounce? So right here. So that area it held. This is also a support right here. This is a low area right here. There's still downside. So the bottom of this candle right here. So that's my next level of downside. So now I have room of a downside. So 250 is ideal entry. And then I have to be okay that it can keep going down to 238 or 235 possibly. So 235, now I know that I have support right here. Okay, I have support right there. I have support right here. Now let's look left even. Okay, that's it. There's no more left. Okay, so 235 is my ultimate line of stop out. So I have a range between 250 and 235 to remain calm. If it falls below 235, that's when I go, oh shit, that didn't work. Okay, so now let's go to an hourly. And honestly, this is I have layers of um, evidence that this has a high probability of bouncing when it resumes at 250 between 250 and 235. So let's take a look. Okay, this is gonna be exciting. Can you guys see on your side, Pilot and Narf, if there's like halt indicators or price level indicators?
Let me try and check. I think Narf just logged in for recording purposes, so I don't think he's here. Sorry, what's the ticker?
LIXT.
Yeah, it's still halted here.
XT shares circuit breaker downside 127%. Announces five. Okay, it just did a direct offering. That's
There you
why.
go.
Yep. So announces 5.8 million registered direct offerings priced at the market. So let's see here. So here's the news. Um, closing offering. Let's see what the price, because sometimes the price is not that bad. So okay, sale of 2.9 million shares of LIXT's common stocks at $2 per share. Okay, so $2 per share. So this thing can go to $2. So you have a $2 downside now. So now you know that 250 and 235 it's still a risky spot. So what you want to do is there is going to be a bounce, but this will settle at around $2 or somewhere around there. So I know LIXT has a bounce play, and which is you're only gonna get maybe like, maybe 25 cents the most on this bounce. So just know that. There we go. Okay, 230. Let's see. Is resumption. Watch the volume. Okay, volume's increasing. Okay, remember they're selling it at $2 a share, so $2 is your next target. And $2 actually is right in the 200 daily moving average. So which is another layers of conviction, right? So I'd like this to drop down to $2 as fast as possible. I don't want it to grind down. I want it to fall there as fast as possible. Okay, let's see. I'll have a pending order at 201 because I want it to just rug pull one more time to 201, and I will buy that because I have a supporting evidence right here. This is a 200-day moving average, which is the 200-day moving average it's a pretty reliable support for a potential scalp bounce. Okay, the longer it takes to come down, the less conviction I have, right? Let's see. Yeah, see? Okay, so as I'm reading this, another thing that you need to pay attention to, after a big sell-off like this is like a shock. This is kind of like a somebody just threw a dynamite in the water and just killed all the fish, and the fish is like the buyers. Everybody's scared right now. Everybody's scared. Nobody wants to buy this. But if it falls faster, right, the bounce player is going to be stocking this. Okay. Okay. Because right now everybody's like scrambling, looking at the news. Is it true? Is it false? Because this is an opportunity to dip buy, right? And so everybody's looking at the news right now. So if there's any kind of false news or anything like that, it was just a short report or whatever, this thing will literally recover itself like nothing. I've seen stock go fall like 50% and bounce right back up. Okay. So if as you're watching this, if you were trading, what would be going through your mind? Like what would be your thought process? You want to go short it some more? Do you want to go long it? Come on, guys, let me hear it from you guys.
Make me pick someone.
I need to go pick somebody. Pick on Darth. Let's hear it, Darth.
No?
No? All right. I'm gonna pick on eCryptonaire.
I was just about to come on. No
All
need to pick.
right. Let's hear it. Let's hear it.
Okay, so based on what I'm seeing right now, I mean, it looks like it's going into an area where it's likely to bounce. Um, it's a risky trade for me, but I would be more so short biased on it
Okay. Yep.
or quick scalp. Yeah.
Yep. I agree. Yeah, we're waiting for another rug pull. That's what we want to see. Here we go. Yeah, that should have fell already to $2. So as I'm anticipating the movements here, I'm still want to look through like, is there anything that I can see? Yeah, 250. 250 was a break. Yeah, 235 was another layer. So now we're below that. What's the next layer? Next layer is 210. 210 on a chart, but we know that they had an offering at $2. Okay. So there's a lot of support in this level right here. So yeah, I would definitely buy this all day at $2 because the probability of it coming down any further is very low. And then going back to the 50% probability bounce, the 50% ratio, go back to the 5 minute. Okay. So you draw it here. And then if $2 your target, you do here. So it has a possibility to get back up to 250. So 250 also aligns with your open price, right? Going from red to green. Um, so that's going to be a heavy resistance. So I would respect that. So $2 I would buy all day long. I want it to get there fast though. I don't want it to grind and take an hour to get there. I want it there in like minutes, if not seconds, um, to have a higher conviction of a bounce. Okay. Actually, what is it there? But anyway, I don't know if it's gonna bounce. But this is gonna grind. This is gonna be like a watching paint dry kind of situation. The longer it takes to get to the bottom. And here's what you don't want to see in the stock. If this thing starts to bounce at this level at 225 and it starts to make it back up to the higher price, to the opening price, then when it's coming down, I'm less convinced for it to bounce at the $2. I'm less convinced because it's already used up its volume, right? All the confident buyers that was waiting, like they're like, it already made a move. Okay. And then also another thing to gauge your your probability of range is look at the 10 and 20. I look at the 10 and 20 as it's like they love and hate each other. Okay. It's literally the behavior. When they get really close together, the price candle and the 10 and 20, they push each other away in any direction. And then when they get too far away from each other, they'll pull each other back. And so the further it gets from the 10 and 20, the higher the probability of it coming back together or grinding back up until it meets each other again to like this, right? So that's the behavior of 10 and 20 and the price candles. Okay. If you see the price way extended away from the 10 and 20 and then the price action gets to like a major support or a resistance level, just start looking for the curl of your 10 and 20 or and the price candle, and that's when you can have that trade to go in your favor. It's a higher probability trade. Okay. Well, this was a dud, no bounce. So obviously it's an offering. It's a dynamite to the water is what I call that an offering is. It just killed all the fish that was wanting to buy this thing. Nobody will touch this until it gets back down to like $1. All right. Well, no show, guys. No show. I was hoping there was gonna be some kind of action in that one.
It's okay. That's the reality of the market, guys. It's again, it's probability, right? So
Yeah, exactly. I was hoping it just dumped to $2, man. Like halt after halt. Yeah, I would have
You
definitely.
didn't you didn't play this today though, did you? Buy the dips?
I did actually. Here's
Okay.
the crazy part. So here's the pattern. I'm gonna give you guys a mistake, not a mistake, but it was a trade that didn't work out. Okay. So look at the 1 minute and look at the 5 minute. Okay. So right here, to me, this is a squeeze pattern. Okay. This is a low
Hmm.
float stock. So you see that tight consolidation. Okay. So I saw this here. I watched it when it started consolidating, but when it got tighter right here, when it got tighter and it's above the 10 and 20 and the 200, I actually took a long trade and I got slammed on. It was on like 1,200 shares, but I was ready to load this thing up. And if you look at it, that's 1 minute, right? If you look at the 5 minute, the 5 minute was also set up right here. Okay. So the probability of it squeezing, since it was a low float, was pretty high. And I was expecting this to retest this area right here. And that's why I took that trade. Okay. And it's still at the 50% ratio. It didn't give the 50% from here. So from this high to here, the 50% was right here, right? And so I was thinking, okay, it didn't quite get to the 50%. Everybody got excited. This is a low float stock. This is, what is this? Shares outstanding is showing on my side at 13.7 million shares. And so I took that trade. And then when it rug pulled, I was just like, God dang it. And just took my losses. I cut my losses on the first, I see right here. So I was riding this. So I took a long right here, right? And I was actually profitable real quick, and they can see that from their side. But I was profitable, and I was like, yes, there's the squeeze, there's the squeeze, it's happening. I knew it. And then it just bam, rug pulled. And so when it rug pulled, and again, I didn't cut it yet because remember the harder the slam, the harder the bounce as well. And I was thinking the 50%. I was like, okay, this should give me a 50% bounce to minimize my losses, as you can see. It didn't quite get there, but I did sell. I did sell into this green candle right here. Because the reason I sold into that instead of waiting all the way to the 50% bounce, because of the wicks started showing up. And then if you also watch the level two started showing some sellers right here. And then if you look left, let's see right here. So this area of support was right here, right? So this was an area of support. So I knew that if it slammed one more time, the higher probability of it bouncing right here was pretty good. So I was okay with it, but then it started bouncing before. And remember, you don't want the stock to bounce before a major support area. But it started bouncing, so I knew with that bounce, it was gonna be less convincing for it to bounce right here at this level right here. Less convincing. If it slammed one more time, it was gonna be less convincing because it's already using its bounce momentum to here. So I just sold here, end up cutting my losses like 200 or 300 bucks or something like that. And I didn't wait for the 50%. It could have kept going, but I was like, you know what? Thanks for the bounce, minimized my loss and got out, right? Because at the end of the day, this pattern is broken because you're below the 10 and 20, and then you're also below the 200. So that's it. And then I just licked my wounds and left it alone. That's it.
Yeah, and to that
Nice.
point, I mean, he's up four figures today, and realizing he took a loss on something and just moved on. So realizing losses are okay as long as you're following rules.
Yep. Yep.
By the way, Pilot, thank you for coordinating this with By the Dips. I meant to thank you as well for putting this on.
Yeah.
Yeah,
Appreciate it,
no
guys.
problem. It's more by the dips than me. I'm just the coordinator, but yeah, more thanks belong to him. So, but
Well,
appreciate it.
yeah, I appreciate you guys tuning in, and I enjoy sharing this information because at the end of the day, if you guys make money and you guys can do something with it. We're all trying to make money in the market, right?
Exactly,
Cool.
exactly.
All right. Any last questions, guys? Do you guys enjoy this? You learned something?
Yeah.
Yeah, I think they all did. I think they all did. That was awesome.
Okay, cool, cool. And this is also recorded. I'm gonna upload it to YouTube and send you guys the link. Or what do you want me to post the link on this one?
Yeah, if you want to upload it to your channel, by all means, go ahead. If you could send me the raw file, I'll also upload it to ours. I will feature your channel in there as well.
Okay.
We have a YouTube. But feel free to post your link in chat. Uh, Everyone, go give him some love and press the subscribe button on his channel. He does run his own Discord, but I mean, I'm going to extend something for him. But you guys can ask him questions in chat. Obviously, he needs to do his own trading, but any questions, I'm assuming he will gladly answer. So, but we will post this on our channel and his.
Right on. Appreciate it, Pilot. And then yeah, I'll post it on there. And then If you guys have any questions, just tag me here, right? Just tag me here and I'll hop on and answer the questions. But as far as like the voice channel, again, I run my own Discord, so I'm on there. I have about 150 students from different countries listening to my live trades.
Yeah, awesome. If you guys want his channel, I believe it's a paid channel, but you guys can DM him, and by all means, feel free to hop in that Discord as well. Um, but yeah, questions can be answered on the trading floor in our Discord. Um, but yeah, just buy the dips. I just want to say thank you once again on behalf of Full Scale and all of our traders here. It's greatly appreciated, and always nice to hear from someone that's making the market work and is consistently profitable. So thank you, and hopefully we can do this again.
Definitely. All right. Thank you guys.
Awesome, guys.
All right. See you.